Welcome to the Weekly Livestock Market Update. Normally, you would see us on Friday afternoons. Special taping today here in Missouri. And I'm anchor reporter, Brownfield Anchor reporter, Meghan Grebner, University of Missouri's Scott Brown. We're going to start. You want to start with the big slide? Do you want to talk a little bit about what happened this week in the markets? Do you have that off the top of your head, just to kind of recap what we saw?
Yeah, we can talk a little bit about this week. You know, we didn't get a lot of movement in prices, so not a lot of change in many of the things, especially on the cattle side of the equation. Hogs was a little bit tougher given some lower prices that we saw for barrows and gilts this week. But on the cattle side, not a lot of change yet this week, starting to get slaughter back to outside the holiday period. Still not running great slaughter numbers on the cattle side from what we saw this week as well.
One of the things that Scott and I talk a lot about is what happens week to week in terms of percentage changes. We won't talk about percentage changes year over year, but when we talk about slaughter numbers, are we looking in 2023 at numbers that are a lot different or set the stage for a different year than we've seen in 2022 and even 2021?
For sure, 2023 will be different from cattle slaughter relative to what we saw in 2022. We've been spending much of our time over the last several months talking about how much smaller the cattle herd's getting. That's going to certainly translate into much smaller runs, I believe, as we get further and further into 2023. And I think we're going to talk about a much different situation than you and I talked about for all of 2022, because beef cow slaughter, heifers in the feed yard, both were much higher, creating higher heifer slaughter, creating higher beef cow slaughter. All those things, I think, change as we look at 2023. And we could be talking about a year that we haven't seen really since 2014, Meghan.
And we all know how things kind of changed. And we're going to get into a lot of kind of cattle trends and how this session is, or this go-round is different than what we've been seeing over the last 10 years and the last cattle cycle as well. So, Scott, as we talk about cattle inventories in general, we've been talking a lot about increased slaughter numbers, shrinking cattle herds. I don't think we can have that conversation without talking about drought.
That's correct, Meghan, and it's a multi-year drought. As you look at the slides that we have up here at this point, I'd like to remind us that number one, when you look back at years like 16, 17, 18, and 19, those were actually good years from a moisture standpoint across the country. So sometimes we talk about just how poor 2021 and 2022 is. I'll actually say we came out of some really good years prior to that as well. And so let's not forget how good it was. However, when you look at the current percentage of D1 or worse drought conditions for 2022, it was stronger than what we saw during the 2012 drought. I think that sets in motion a lot fewer cows as we look ahead. I will say that's going to be the wild card that Meghan and I get to talk about all year long, I believe, in 2023 is how's the weather? How's it changed? Is it better? Do we get recovery? Or is it another year of poor weather? Another year of poor weather sets us in motion, I think, for even fewer cows longer term. But right now, you look at that graph, and it just reminds us of how dry it's been in critical pieces. So these are the 30 top beef cow states that you see the percentage of land in a D1 drought designation or worse for 2022. We haven't been there. Record levels when you look at what happened in 2022.
Let's talk a little bit about, as we look at this drought monitor map that you have, which was released this last Thursday, and your graph here, we've talked a lot about beef cow slaughter numbers. And when we're talking about cattle inventories, I don't think that number and those numbers get away lightly when we're talking about where we're headed.
Yeah, so it's been back-to-back years. So 2021, we saw beef cow slaughter 9% above the 2020 levels, now followed up in 2022 with another 12% above the 21 level. So we've been slaughtering out of that beef cow herd as producers have made decisions to cull, trying to deal with dry weather. Those things come back to really, I think, set in motion what will be much tighter supplies as we look 24, 25, and into later 23 this year as well. So that cow slaughter side, let's not forget, we were up in terms of total cattle slaughter in 2022. That's part of the reason we were up in total slaughter. That likely doesn't continue in 2023 unless we talk about drought remaining as tough as it is right now.
Hopefully that is not the case, and we see a turnaround in precipitation. The other part of that equation, Scott, is not just cows that are beef cows going into slaughter. It's the number of heifers that are getting placed in feed yards as well.
Yeah, that's right. When you look at current inventory of heifers on feed in feed yards with greater than 10,000 head, more than 40% of that inventory is heifers. That is also the second piece of the leg that says we are not building beef cow inventory. You look back at when we built in 2015, 2016, we'd have been down around 25, 30% of inventory on feed would have been heifers. When you're at 40%, you are not building the herd. So we have not held heifers back to this point. And those heifers also have come to slaughter. Had we not had that happen, we'd have had a lot less beef production in 2022 than we ended up with.
Let's say, if we're going to talk about growing the herd, and I know we'll get more into this, but if we're talking about placing heifers on feed, what happens if we start holding heifers back in terms of beef production, if that was such a large component of the supplies that we're bringing in?
Yeah, so we certainly will see the other side of this. I don't know when we build the herd. I'm not suggesting it's going to happen anytime soon, but when we do, we take away from current production. That will happen in this next cycle as well to some extent. And so we'll get tighter. We're going to see a very, very different situation than maybe we've seen for a long time. You know, we kind of go back to 2014 as that really high prices. I just remind us, don't think that this coming cycle behaves exactly like that one did. But when we start to hold heifers back, it will be that much more pop to, I think, the prices as supplies get even tighter.
Do you want to take a look at this chart too and talk a little bit about that cattle cycle and looking a little bit closer at those two cattle cycles?
Yeah, so for sure, I think this is a good chance to talk about. All right, so two lines here. The gold line is the cycle that I've said starts in 2010 and goes through 2022. The black line is a cycle that starts in 2020. All right, so first thing I'll say about the black line is my crystal ball is cracked. I will not get this all correct. However, I think it's important to remind ourselves, I don't think January 1 of 2023 is going to be the bottom of beef cow inventory. I think we'll still be down January 1 of 2024. And in fact, if you look at my projections, I'll say we don't even turn by January 1 of 2025. Now, there's too many things that could change that a lot, so be careful with what I say here. But I want to go beyond that black line. So beyond January 1 of 2025, so the last point on that line, I will say we built back really quickly when you look at the gold line. I remember saying very loudly, even an ag economist at the University of Missouri could make money in the cow business in 2014. All right, so we had a very good run of profitability to that drought of 2012 that I think actually turned inventory up very strongly. I'm not yet convinced that we're going to see the same result in this next cycle. I could see us dragging down lower longer, especially if corn prices stay higher longer.
How much does that map at the bottom and what happens with it in 2023 impact where we head here?
Yeah, so to me, it's where does that red go? Where does that red drought area go? We've seen it stay really in cow country for the most part, wheat as well. But if that were to keep moving east, which you can find some indication it's trying to move east, and it stays in corn country, and we have high corn prices for a period of time, I think that will keep some profitability out of the cow-calf side as feeder cattle prices don't move as high, as otherwise might be the case.
It's been interesting. I'm in, obviously, the eastern part of the country, and for the most part, we were really well off in terms of precipitation. That was not the case this fall, and as I talked to cattlemen and women in Kentucky and in other parts of that area, those conversations sounded a whole lot more like when I talked to folks in this part of the world.
For sure, and so it's too early to get too excited about next year's corn crop, and it looks like maybe the South America corn crop's going to be better than we would have thought. But if we put a really good crop in the bin, I can get much more excited. If we in the U.S. put a really good crop in the bin in 2023, I can get more excited for cattlemen because I think that pushes corn prices lower. We'll see how many acres we plant come spring, but you push corn prices lower, and then I think all of a sudden it looks better from a feeder cattle price perspective.
Does that graph have a quicker upward trajectory if we set the stage for lower corn prices and lower feed costs? And we're going to get into that too here in a little bit.
So potentially, the one thing that I'll say is, and I don't have any data that says this is correct, but to me the structure of the industry is changing very rapidly. I sometimes make the comparison to small dairies that exited the dairy industry 15 or 20 years ago. That was as much producers who retired and the next generation was not there on those farms. I get the sense I'm seeing more of that now on the beef cow side as well. When those smaller operations are deciding it's time to retire, not that it's financially driven as much as it's retirement and the next generation is not there, that we're changing the structure. And that might be the other reason why we don't turn up as quickly as we might have in a more traditional cycle.
This is not always a sunshine and rainbows and glitter conversation. But the one area I think that is a bright spot and has been even surprisingly through this economic downturn that we've been going through is beef demand. So let's talk about that in terms of 2022, 2021, and how that sets us up as we look ahead to 2023.
Yes, I always say it's beef demand, not consumption that we want to talk about here. And we can talk about it first from an international perspective. And a few things I'll say. All right, so the black and gold line off the left-hand side of the axis that you see, we have seen growth in exports. I always say countries like China matter. We haven't talked about China in the past, but beef headed to China, I think, was helpful for this industry in 2022. The traditional markets, I sometimes say Japan, Korea, have also been important to the mix as well. But the green line off the right-hand axis, all right, so we were moving more quantity, but the phenomenal piece of that export puzzle is the value at which we've been shipping outside on a quarterly basis, $2.5 billion moving out of the U.S. in terms of beef exports. That's the very good piece of this. And I go, we're doing that in an environment of it's tough to get product moved internationally. Supply bottlenecks exist in a number of places along the way. So that value proposition has been the really strong part. And before I forget to say it, you look at the next 10 years, the growth in beef consumption probably occurs outside the United States, not within it. So this is a focus that we don't want to lose sight of, because I think if we want growth in front of us, it's going to come from a larger standpoint outside the United States.
We talked a lot about China in terms of pork production since we started doing this in 2016. And interestingly enough, we're talking about it less in terms of pork consumption and pork demand, and more so in terms of opportunity for beef demand. How much does China continue to play a role moving forward?
Yeah, so I think it's important to remind ourselves it's different from pork to beef. We got pork in China, and I'll say in hindsight, African swine fever made a big difference. All right, so and as they recovered from their disease issues in terms of African swine fever, we've seen pork exports to them go back down. I think when you look at what's been happening on the beef side, it's been demand driven, as you're finding consumers in China that frankly want the higher quality beef that we can provide. That's not all consumers in China, but there's a growing segment that I think are very interested in that higher quality beef that we have to offer.
And it's not just the cuts that we love here in the United States.
That's correct. When you talk about offal and some of the other products, yes, I will say 2/3 of all of the consumption of those products occurs in China. We don't want to lose that market. Otherwise, instead of having some value, that might be something that we have to throw away or render at the end of the day. So those products matter in terms of the bottom line of cattle prices as well.
Now, you brought up domestic. So as you take a look at this, that has been able to hold on fairly well.
Yeah, so first of all, to the graph, sorry, it says sell range instead of the years as they're supposed to be listed on that graph. But I just want to point to one of them. So the very upper left point that's setting at 25% on the vertical axis and minus 4%, that's the change in available beef supply in 2013. All right, so when we cut supplies, all right, so USDA is telling us for 2023, we're going to be down in per cap beef availability by about 6%. 6%'s off that chart. I mean, let's be very clear about what that says. It is a point we have not seen in decades. Usually if we were down 6%, I sometimes say that's 25% higher fed cattle prices. That's what this chart's saying. The line that I have drawn through there is kind of a demand line, if you will. But let's understand that 2023 could get really exciting. We have some general economy things that make me a little worried. But when you cut beef supplies by 6%, beef availability by 6%, that generates higher prices. Now, I don't like that outcome and I'll say why here for a second. I want high prices because demand's growing. I don't want high prices because we're cutting supply, all right, which is the outcome that we're getting here in 2023. But there are reasons to be optimistic about prices that one could see this year, Meghan.
You mentioned some of those concerns about general economy. Walk us through some of the things that you're highlighting here.
Yeah, so I've put up here for you previous times we've had downturns in the general economy. So 1991, 2008, 2009, and 2020. All right, so if you look at the bottom of the graph, it'll tell you the reduction in real GDP for those periods. 2008 had a modest uptick, but the bars that go along with that, and you can just stay on the left side. So fed cattle, what did they really bring at the end of the day? Every time we've had a recession, fed cattle prices have moved lower. So I think that's the drag, all right? So previous slide, I'm saying, hey, we could get 20, 25% higher fed cattle prices because of the reduction in supply. I'll say this is the issue I'm watching as I look forward at 2023. Because if we talk about an economic contraction, which over the last 4 to 8 weeks, I'll say, to me, things have gotten a little more positive in terms of the general economic outlook. But if we were to talk about a stronger contraction as we get into 2023, I think that takes a lot of the shine off of higher cattle prices. Meghan, maybe that's an opportunity to do a little risk management.
Speaking of risk management, there are tools that producers have available to them, and you and I probably talk about this at this point in what we do every week, more so than everything. There's the Livestock Risk Protection Program, and there's also, which unveiled this week or was supposed to start this week, that cattle contract library. Tools are great. How important is it going to be for producers to know how to use those tools?
Yeah, so I think it's going to be more and more important. I expect more volatility ahead, not less volatility. I will sometimes talk about it as an economist saying we face very inelastic demand, which all you need to learn from me saying that out loud is a lot more variability in prices, both up and down. Opportunities for high prices, opportunities for low prices. Doing risk management takes some of that volatility out. Now, we want volatility. I will tell you, you want volatility because without volatility, it's easy to market. Volatility gives us an opportunity to get higher prices. I will say, if you decide you want LRP, I hope you take an LRP contract and don't get a payment. Let me say that again, because I think we forget this. If you take an LRP contract and you pay the premium, which you're going to know in advance what it is, I hope you take that contract and don't get a payment, because that meant cattle prices went higher. All right, this is risk management. It's not maximum price. And we know with some of the tools like LRP that have gotten better from a subsidy standpoint the last few years, that you can get some relatively inexpensive risk management. And so I think that's important.
I think the interesting one, and the unknown still, right, is the cattle contract library. We still have to see what we're getting. We still have to see what information is coming in. Is that kind of a sit back and wait and give it a little bit of time to see how to best use it and how you can figure out a way to use it to your advantage?
Yeah, so I think there's some opportunities with the cattle contract library that could come. There'll be maybe other opportunities to get more clarity about pricing. We've had more in the hog side of the industry for a while. We've had a contract library on hogs. It does show you a little bit more of the distribution of prices depending on the kind of marketing arrangement that you might have. I think it provides more information, which is all very important as we move forward to get as much clarity about these markets as we can. I will say, even in hogs, the problem that I've found is it's almost information overload. So figuring out how to get through all of that contract library information on the hog side, a lot of folks will gloss over to that. To me, the most important thing is getting the information out about the kinds of contracts being used, where you sit relative to others participating in the marketplace.
We are starting to wind down our time, so we're going to clip through these last ones a little bit because we want to give you an opportunity to ask Scott questions as well. And I think there's a couple of microphones, so if you do have questions, you can start to make your way there, and we'll get those into him. This is my favorite part of the program because it's all curveballs for Scott, and it's and it's not me. Competing meat prices declined in 2023, and this is, I think, really interesting as you get into that demand side of things.
So it's whether or not consumers are going to switch. I think that's the issue here. We're going to push high beef prices at consumers in 2023 and 2024. Looks like we're going to have lower chicken prices. I'll say avian influenza. Let me get the right word out here. Avian influenza could spell a little bit of issue there, but lower prices. I expect lower prices on the pork side at retail as well. And so do we get consumer switching? I'll tend to say I think it depends on the product, because I'll go at it this way. How many of you, when you want to have a really good meal, what do you go eat? There you go. I got people to say steak. I was surprised. I knew it'd be steak or chicken.
Oh, bad jokes.
All right. But the idea is if I'm going to have a really good meal, I'm going to go have steak. I might not care so much about the price. But if I'm going to have some lower quality or lower priced beef products, I might be competing against pork and chicken in 2023 like I haven't for a few years now. So I think that's one of the things we need to be worried about. Meghan went on to this quality side. I will say a little risk management strategy here. Producing higher quality beef relative to lower quality beef, I think, is a risk management strategy. And I'll give some of my colleagues from the animal science side Dr. Patterson, Dr. Smith, others, some credit here of helping the Missouri cow herd be better genetically in terms of producing higher quality. But you notice the prime to choice spread continues to widen. Select has been going down, especially as we went through 2022. So I think even with the general economic slowdown, those that make a lot of money likely aren't very affected by the price they pay for the product. So that highest quality beef likely has some staying power.
I think it's really interesting when you talk about that risk management. We can harp on LRP. We can talk about using cattle contract library and continue to have that conversation. But I think the one conversation that doesn't happen enough is making investments in genetics. And I think that's really key where your state beef associations and animal science and extension come into play to give you that opportunity to do things better and create that niche demand that's not going to go away.
I always say doing things differently might be good. We often find ourselves in the rut of doing the same thing year after year after year. Being able to make changes that are reflective of what markets want, what consumers want. If at the end of the day you're producing a product that consumers want, it'll be a win. All right, so I think that's one of the things we never want to forget, Meghan.
All right, so as we wrap up, let's talk about outlooks for the different segments of the industry. All you.
Thank you for making me have to talk about margins. All right, so number one, I'll say we've got at the bottom of that graph farm to wholesale margins. The thing I'll say on the cattle side of the equation, the gold line there, it's been moving down. We've changed from what were very high margins to much lower margins. I do not want to be a cattle processor for the next few years. I don't think, because I think those margins will continue to get tough as cattle supplies get tight.
Isn't that a switch?
A switch. It will be interesting from a policy discussion as margins have moved back down, whether we continue to focus on that segment of the industry or not. I will just say, don't forget wholesale to retail. All right, so what's the green line on my chart? The cost for moving product from the packer basically to the grocery store to the end user continues to be very high. Packaging cost, labor costs, energy, it's gotten better again, but fuel costs continue to be high. I'm worried those margins are very sticky as we look ahead, and we'll have to watch that, Meghan.
How much is the labor component of that discussion on all ends come into what we see from the farm really to the grocery store? Yeah, so you're talking roughly 60% of the cost here is labor-related costs getting from farm to retail, depending on the product that you might want to talk about. So labor is going to be important. We did get a jobs report out on Friday. We added more jobs than folks thought. I think it was 230,000 new jobs being added. I don't think we've gotten over the tight supply situation in labor markets. So I think labor will continue to be a constraining factor as we look ahead. It's interesting you bring up that jobs report. We talk about that in terms of obviously this element of it, but demand as well. And I know taking a look at that report and looking at the year end from 2022, wages didn't necessarily rise with inflationary conditions as well. Yeah, the stock market decided to get pretty excited about the report on Friday as, yes, we added more jobs, yet we didn't quite get the same pop in wages. 1 month I don't want to read too much into, but maybe we are starting to slow some of the wage growth and some of the inflation that we've been seeing. All right. Feed cost. Final topic for us today. South America and 2023 U.S. crop. Yeah, so the gold line here being corn prices. For a minute, I want to remind you when we were selling $3 calves in 2014. We were selling those $3 calves at $3.50, $3.75 corn prices. So corn had already come back off of the very high prices from the 2012 drought. When you look at where we sit today, corn prices that are still $6.50-ish,
I still hear a lot of 750 plus corn being fed in western Kansas. I think that we could see record fed cattle prices in 2023, but not see record feeder cattle prices in 2023 unless we talk about corn prices moving down significantly. So realize we're not at the same place that we were in 2014 in 2023. Now, again, a good crop in the U.S. here, I think in 2023 could change this to make feeder cattle look even better, but it's a different situation than the last time we went through this.
How much are we watching Brazil's crop as well? I know Argentina's and southern Brazil have been dry, but the rest of that region, not the same story.
Correct. It looks like we're going to have a fairly good crop from what I can see right now in Brazil. Argentina's been a little concerning thus far, but it's so we need all of that to happen. When I look back and see where corn prices have been, yes, there's been some demand things that have pushed corn prices higher, but it's really been supplies that have been tight for a few years in a number of key growing regions around the world that could change in 2023.
Scott, anything else from you this week?
I think that's it.
Is this the part where if you guys have questions, there's a couple of microphones. We'll give you a minute or two. I'll tell you a little bit about the Weekly Livestock Market Update. If you want to subscribe, we're actually over at the booth and can get you signed up as well. It comes out every Saturday morning. You can submit questions and comments as well, and then it gets delivered to your email box bright and early. You can have it with your coffee. You might get off the hook today.
Okay, quick question.
Yes.
You say production will be down, estimated 6+% in beef production. What do you expect exports? Will they be off 6%, or are we going to have more export demand, less export demand in this scenario?
So it's a good question. Number one, I guess when I look at exports right now, Bruce, I still don't see anything but some positives in 2023. I think our traditional destinations stay fairly strong. I say they're Japan, South Korea. I think Australia could start to be a little better competition here as they've been recovering from their drought of a few years ago. I think China stays strong. Maybe not grow at the rate that we would have seen in 2022, but I don't see a contraction. I don't see exports going away to the point that it offsets the decline in production. Now, maybe the flip side of this equation, I see imports going higher in 2023. We're going to draw beef into this country where we can. I'm not sure there's a lot of competition ready to deliver a lot of beef to us, but at the prices that I think we're going to see in this country, there'll be incentive to bring more beef imports into the U.S.
Yes. Oh, hold on one second.
How do you think the activity in Russia and the war is going to affect our economy, our farm economy here?
So from a cattle price standpoint, I don't expect to see a lot of direct impact now to feed costs. I think, we've been seeing the effects, especially wheat markets in particular, that could drag on into later this year. I have such a hard time of knowing when's that going to be to the end point. Does it escalate to become worse? Hearing a lot of corn left unharvested because they couldn't get there to harvest it. I think marginally that matters. I think more the drag from the wheat side of the equation is going to be important. If we were talking oil seeds, I might be a little more concerned about the effects of some of the Ukraine loss there. But from a corn standpoint, to me, it's what's happening in South America and the U.S. that's going to be most important going forward.
Thank you all so much.